家好，我的名字叫 Rashid， 今年24岁。我在2017年在 IIUM Academy 学习了法律。现在呢，我想借此机会感谢 IIUM Academy 为我提供了最棒的设施，还有优秀的老师和员工。能够在 IIUM Academy 学习是我最好的经验。谢谢。
Assalamualaikum. 안녕하십니까 여러분. 잘 지냈습니까? 제 이름은 아비다입니다. 저는 프르나이 사람입니다. 하지만 지금은 저는 한국에 있고 KDI 학교에서 공공정책을 공부합니다. 네. 저는 2016년에 IIUM Academy에서 공부했습니다. 네, 재능 있고 똑똑한 사람들을 많이 만났습니다. 처음에는 아랍어를 공부하지 않아서 아주 걱정이 되었습니다. 하지만 IIUM Academy 교수님들은 친절하고 저는 기본적인 아랍어를 배울 수 있었습니다. 네, 그래서 여러분 걱정하지 마세요. 네, 새로운 IIUM Academy 학생들에게 좋은 일만 가득하길 바랍니다. 그리고 IIUM Academy에게 감사합니다. 네.
السلام عليكم ورحمة الله وبركاته. أنا محمود حسن بن مجيد حسين وأنا من ماليزيا. انضممت إلى أكاديمية IIUM في عام 2016 وقمت بعمل تحسيس في العلوم الاقتصاد والإدارة. بصراحة كنت قلقة في البداية عندما كنت سوف أشارك لأنني لا أعرف أحدا وهو مكان جديد، لكن بعد الانضمام التقيت بالعديد من الأشخاص الرائعين. كان الموظفون لطيفين وودودين، حتى الدورة التي يتم تقديمها هناك مفيدة للغاية عندما تنضم إلى درجة علمية. لذلك إذا كنت تبحث عن مكان لإجراء دراستك التحسيسية فإن أكاديمية IIUM هي الاختيار الصحيح لك. أتمنى لكم كل توفيق وشكرا لكم.
Assalamualaikum warahmatullahi wabarakatuh, ladies and gentlemen. Our session will start shortly. And as a reminder to everyone, please make sure your microphone is turned off to avoid any interruption during the session. And if you have question to our guest today, please write your question in the chat box or wait until at the end of the program. Bismillahirrahmanirrahim. Greetings to Dr. Muhammad Afzanizam Abdul Rashid, our esteemed guest speaker, ladies and gentlemen, listeners who are willing to join us today. Welcome to the Baseerah Talk Series, a program organized by the IIUM Academy of Graduate and Professional Studies. My name is Shifa from IIUM Academy event. Today, we have participants from the Zoom meeting and also YouTube Live. So for those who are just joining us, welcome everyone. Baseerah Talk Series is a monthly program held since March last year, where we invite speakers from skill and professional fields who will present topics related to their respective fields. In the last session, we have invited speakers from various fields and institutions such as Federation of Managers Malaysia, FIMM, Telkom Axiata Berhad, PNB investment, and others. So if anyone is interested in watching the previous session, you can follow the IIUM Academy YouTube channel, where we have uploaded all the Baseerah talk series, all the Baseerah talk session there. So for our session today, we are very pleased to invite Dr. Muhammad Afzanizam Abdul Rashid, Chief Economist and Social Finance, Bank Muamalat Malaysia, who will share with us his title, Navigating a Volatile Market. So before we start our session today, let me invite Dr. Rizalawati Ismail, Deputy Director, Business Development and Marketing of IIUM Academy, to introduce the profile of our special guest.
Thank you very much, Shifa. Assalamualaikum, everyone. I'm honored to introduce to you our brilliant speaker today. He is a Chief Economist and Social Finance at Bank Muamalat Malaysia Berhad, Dr. Muhammad Afzanizam Abdul Rashid. Dr. Afzanizam holds a Doctor of Philosophy in Economics and Masters of Business Administration, Applied Finance and Investment from University Kebangsaan Malaysia, as well as Bachelor of Business Administrations, Honors Degree, Finance, and Diploma in Investments Analysis from IIUM. Dr. Afzanizam has more than 20 years of experience in investments research, especially in the field of economics and capital market. Previously, he had served in a few institutions such as Employee Providence Fund, EPF, Bank Islam Malaysia Berhad, and Retirement Fund Incorporated, KWAP, among others, as an economist. His role in Bank Muamalat Malaysia Berhad now is to advise the bank on macroeconomics related issues such as fiscal and monetary policies. He is also a regular commentator in the media as well as academic advisor in several local universities. I'm sure you have seen him giving comments on economics on many television channels and other media platforms. Today on our Baseerah Talk series, we are honored Dr. Afzanizam will be talking on the topic Navigating the Volatile Market. So without further ado, let's welcome Dr. Afzanizam Abdul Rashid. Welcome, Doctor. Over to you. Thank you.
Okay, thank you so much. Assalamualaikum and a very good morning, everyone. I hope you can hear me because I noticed my network is not that good at the moment. Perhaps I shall close my video just to allow the bandwidth to be much bigger than what it is now. Okay. So before that, let me share my PowerPoint slides. Can you see my PowerPoint slides?
Yes, Doctor.
Okay, let me just give me one moment, yeah. Okay, where is it? Can you see my slides?
Yes, Doctor, yes.
Okay.
I think you're sharing the screen, Doctor. You have to change
Yeah, well, okay. Somehow I can't really move my slides. Okay, can you see it?
We can see your screen, your computer screen.
Okay. Okay. Oh, gray screen, huh? Not my PowerPoint slides.
Yeah, now it's your PowerPoint slide.
Is PowerPoint?
Yeah.
Okay, Alhamdulillah. Thank you so much.
Yeah.
Okay, basically, I will try to walk you through in terms of the topic for today, which is navigating a volatile market. I think when we say a volatile market, I think these words has been often said in the financial market sphere, especially in the current context, whereby we are likely to see the global economy to undergo a period of slowdown, as what been envisioned by the IMF. They are looking at global GDP growth to hover around 2.7% this year from last year's 3.4% growth. And this will be primarily driven by the monetary tightening in the US economy especially, and of course some parts in Europe, and not to mention also the rising inflation rates, and this being exacerbated by the geopolitical concerns, especially war in Ukraine. And of course, while we are worried about the downside risks in terms of the global monetary tightening and also rising inflation rates, but at the same time, there are also pockets of opportunity perhaps, especially when the China's economy decided to abandon their zero COVID strategy late last year. So that opens up perhaps opportunity for global economy to experience a better turnaround, especially for key industries like tourism related industries, aviation. So these are the key industries that would actually help, especially in Asia, to grow or at least to offset any potential slowdown in the advanced countries. But nonetheless, while we are hoping that China's economy would help the reopening of China's economy to sort of helping some sort of underpinning the economic growth globally, but the downside is pretty much tilted on the downside. Okay, so basically my outline for presentation today, I will walk you through 3 key points. Basically, I would like to share what will be the sources of volatility, and after that, I will walk you through what's the impact to the economy, and lastly, what will be the policy response when dealing with such excessive volatility in the economy. Yeah. Okay. This slide shows you the quantum of increment in the global interest rates. When I say interest rate, it is policy rates, which is being administered by the central banks. For instance, if it's federal fund rate, US federal fund is essentially administered by the Federal Reserve Bank. The ECB is essentially the European Central Bank. It is governed by the European continents, or rather the collective central bank located in Brussels, ECB. And then on the left side, which is in United Kingdom, which is their policy rate, is called base rate. So the charts that I'm showing to you now is not the actual policy rates, but rather it's the quantum of change, quantum of increment in the policy rates. For instance, for the US federal fund rate, for the month of March, it was raised by 25 basis points, which is 0.25%. And in May 2022 last year, it was raised by 0.5% or 50 basis points. But thereafter, the Fed fund rate has been raised by 75 basis points up until November. And then you can see the pace of increment of the upward adjustment in the interest rates has actually slowing down to 0.5% in December, and recently in February and March, it was maintained at 0.25% in terms of the increment of their Fed fund rates. Similarly, in the case of ECB, they have actually when initially they started with 0.5% in July. But then they become hawkish, they become more aggressive. They went up to raise it by 0.75%. but thereafter we can see that the trend is slowing down to 0.5%. Similarly, for the case of UK, you can see that the base rate has actually, significantly going up by a rate of 0.5%, 0.75% in November, but then thereafter is started to slow down. So what it tells you is that last year, the major central banks have been so aggressive in terms of raising their interest rates, and this is because of their policy objective, which is to reduce the inflation rates, which is their mandated targeted inflation rate is about 2%. Yeah, but last year they saw inflation rate went up to as high in 40 years. Yeah, in the case of US, they have gone up, I think about 9.2% in the month of September, thereabouts. But then thereafter, it started to slow down to about 6%, 5% in the recent data points. But however, in the case of ECB in Europe, their inflation rate is still high in the region of 10%. So that goes to show that their move or their efforts to reduce inflation by way of removing the excess liquidity from the system has not actually resulted any slowdown in their inflation rates. So that would mean prospect for higher interest rates in Europe is still high, and if you look at their intention, or rather their communication to the public, they are willing to go the extra mile in terms of raising the interest rates to the point that they are willing to risk the economy to go into recession, because they think that risk of inflation has actually outweighed the risk of slowing economic growth. So that's the setting or the mantra laid out by the global central bank. So this has actually sent the ripple effect to other economies, especially in the capital markets or even in the foreign exchange market, because when, especially in the US, where the Fed fund rate was raised by 75 basis points for 4 meetings in a row, it created some uncertainties over in the economy in terms of what will be the impact as a result of the aggressive interest rate increment in the global economy, in the major global economy. So this is the main issue at the moment, and so far we have yet to see any signs that the major central banks are likely to try to reverse these policies. We need to say the market is expecting that the Fed will actually stop their interest rate rises, but from the communication from the officials, it seems that they are so adamant to ensure that they will continue to tighten their grip on monetary policy. Yeah, so this chart will show you in terms of the extent of global monetary tightening. And then we look at another sources of volatility, which is the geopolitical risk. So to be honest, there is no charts or rather any indicators that shows the level of geopolitical temperature, so to speak, but we can deduce from the trade balance with especially in the case of between the US and China. You can see that the US economy continued to record a trade deficit with China. I think the latest number for 2022, the trade deficits between US and China is about 383 billion ringgit. It has actually widened from 310 million in 2020. While it is improving in terms of trade deficit, it's actually narrowing from 420 million in 2018, but it has widening back in terms of the trade deficits. So it goes to show that during the Trump administration, if all of you can recall, Trump administration has been so adamant, or rather have a hard stand towards China, and they have imposed so many import tariff and whatnot, simply because they want to reduce the trade deficits. But then after Trump and the Joe Biden, it seems that the trade deficit has continued to widen again. So it goes to show that the issues that has been underpinning the trade war between the US and China has not really, totally resolved. So this will be I would say, between the US and China. And the right-hand side, the right-hand charts, we can see that the share of China's economy in the world's GDP has actually, significantly rising at a rapid pace. Yeah, so it goes to show that China presence in the global economy has been so relevant, has been so significant in various industries, technology, tourism, manufacturing. So this creates uneasiness, especially in the parts of US, whereby they see China as a threat in terms of the dominating the global economic power. So again, while we are not sure how this conflict will actually resolve, but we can safely say that the geopolitical or the trade frictions between the US and China will continue. And not to mention, there are also other issues that has been at play, especially when it comes to the sovereignty of Taiwan, for instance. It continues to become a sore point between the US and China. If you can remember last year, the former speaker for the Congress, Nancy Pelosi, she visited in Taiwan during August last year. It resulted the commotions on the part of China. They started to launch their military exercise within the Taiwan Straits. So it creates uncertainties, it creates uneasiness about the potential military actions on top of what has been exhibited in the Ukraine war. So again, while we are not sure whether this conflict will be resolved soon, but we know for sure that with these statistics, the geopolitical risk will continue to affect, at least it will affect the commodities market. So again, that will give rise in terms of how inflation would actually evolve going forward. Okay, so I've talked about higher interest rate in the US economy in parts of Europe. I've talked about the geopolitical risk. So now we look at the shape of the US Treasury yield curve. So essentially, yield curve is a curve whereby we will plot the market interest rates for various tenures. So in this case, we will look at the difference between the 3-year yield and the 3-month yields for the US Treasury bonds. So typically, in the normal markets, the short-term rates, which is in this case 3-month yield, would always yielded lower than the longer-term tenor, which is in this case is 10-year yield. But now you can see that the difference between the 10-year and the 3-month yield, it has resulted a negative balance or a negative spread, which is about 166 basis points. So it goes to show that the 3-month yield is much, much higher than the 10-year yield by 166 basis points. So this is odd, this is abnormal, and this is not good, because typically when the US Treasury yield curve started to invert, which means that when the short-term yield or the short-term rates is higher than the 10-year yield, it connotes that interest rates in the going forward period is likely to be lower. And if that happens, then it really, show that the prospect for slowing economy is actually has been rising in that sense. And even based on the empirical studies, US Treasury yield curve has been a very good indicator for predicting for the upcoming recession. So typically when the curve inverts, it would takes about 1 to 2 years for the US economy to be in recession. So that's the reason why markets are very mindful. Markets are very anxious about the state of the economy and what will be the impact to the global growth going forward. While we are somehow assured that authorities has been central bank across the globe has been saying that, especially in our case, Bank Negara has been saying that the risk of recession is low, but the markets are saying that risk of recession is still visible in that sense. So this is I would say the key sources of volatility that will continue to shape the global markets, the global economy going forward. And you can see that these charts, you can see that our Malaysian economy moved quite nicely with the world's GDP and also with the US GDP. And if we look at the coefficient of correlation between the Malaysian economy and world's economy and Malaysian economy or US economy, it stands about 82% and 71% respectively. So it means that if the world's economy recorded a positive growth, likely we will continue to record a similar trajectory. And the same is also true if US economy and world economy started to go into recession. So it really actually solidify the case that Malaysia, while it is small, but is widely open to trade and investment. So anything that happens globally, externally, would actually be transmitted to our GDP growth in that sense. So my point, please watch out what's happening outside there, because it's going to affect our economy almost directly. So that's the key message from this slide. Okay, and then that's on the impact to growth. And like I said, we are so in tune to what's going on in the global economy. Unfortunately, in terms of prices, our economy also somehow being tagged along with what is happening outside of our food-related industries. So on the left-hand side, essentially this is the inflation rate for food and non-alcoholic beverages versus total imports of agri-food with 12 months moving average. So the point that I want to make from this chart, from this left-hand chart, is that our food inflation is moving almost one-to-one with the state of global food prices. So it resulted in our imports to increase, and it has been transmitted in terms of our food prices. And bear in mind, food and non-alcoholic beverages, it accounted about 29.5% in terms of the composition of Malaysian CPI. So again, with the ongoing geopolitical concern, which has a direct impact in terms of commodity prices, it might be transmitted to our economy by way of food-related prices. And on the right-hand charts, this bar chart, it shows you the trade balance within the agri-food industry, our exports of agri-food versus the imports of our agri-food. So it resulted in a negative balance, which means that we import more than what we export in terms of agri-food industries. So last year, we recorded about 29 billion ringgit in terms of trade deficits. And this deficit level, if you notice, since 1990, it has been widening. So it shows that Malaysian economy continues to rely on food imports for local consumptions. So whenever that happens, whenever our ringgit depreciated, it will be transmitted in terms of our food prices. So again, this is the impact arising from the volatility in the international markets. So we talk about growth, we talk about inflation, important inflation especially. Now when it comes to income, I think because of inflation is high, so it really explains why our real income, which means that income after adjusting for the inflation, has been quite low. If you look at these charts here, this is basically the median salaries and the average salaries, and the data points actually being gathered from Department of Statistics Malaysia. Of course, I did some extrapolation in terms of predicting the 2022 numbers. But the key point that I want to tell you is that the difference between the nominal income and real income. Nominal income is an income without adjusting anything to inflation. But for real income, for real salaries, we adjusted with the consumer price index. Yeah. So we get that for instance, for 2022, I estimated that the nominal income or nominal salaries for median salaries has actually improved to 2,334 ringgit for 2022. But after adjusting for inflation on real basis, on real terms, essentially our median salaries in Malaysia is about 1,835 ringgit. So we can see the difference is the jaw has been quite wide line in that sense. So it goes to show that the purchasing power of average Malaysians or median salaries in Malaysia has actually not that great. And similarly for average salary, you can see that last year I estimated that the median salary is about 3,164 ringgit per month. But after adjusting for inflation is about 2,487. So again, because of inflation, it has an impact in terms of real income. So while this can be, of course, it's not something that music to our ear in terms of the jaw between the nominal and real income. But the point that I want to raise is that while we aspire to earn a high income at one point in our life, but I think if you focus too much on nominal income, this is what happened. Yeah, I mean, we may get higher nominal income, but after adjusting for inflation, we don't earn that much because we cannot buy stuff as in the past. Yeah, so again, it has policy implication. While I'm not saying that we shouldn't be, shouldn't be looking at nominal income at all, no, but we also need to be mindful on the state of inflation. So that's why I think real income is much better gauge the way I see it. So in that sense, in terms of policy response, it has to be holistic. Yeah, while the government should be focusing on creating more high quality jobs that will pay better, but at the same time, the government also need to address in terms of cost of living, inflation, and whatnot, so that on real basis, Malaysians will earn better, or at least their purchasing power is intact. So it has to work both ways. The nominal income has to go up, and at the same time, the prices has to be stabilized in that sense. So with that, I think we should have a better view when we talk about salaries, because more often than not, when I got questions on salaries, on income, the discussion has always been one way, which is to raise the nominal income without having a clear discussion on what should be looking at in terms of having a decent growth in terms of real income among Malaysians. So yeah, that's the point, the key point I want to raise. Okay, and then we talk about subsidies, and on the left-hand charts, you can see that RON 95 prices, which is the commonly used fuel among Malaysians, now it is being subsidized, and then the price is being fixed at 2 ringgit and 5 cents. But generally speaking, the spread or the difference between RON 95 and 97 is about 30 cents. So this is how I derive the market price for RON 95. So you can see that RON 95 as it is now, given the current market price, it should be selling at 3 ringgit per liter, as opposed to the subsidized prices, which is about 2 ringgit and 5 cents. So there's a huge gap there. There's a huge the difference there, and you can see that the government has been spending so much on subsidies and petrol, on petrol, diesel, and LPG. Last year they spent about 50.8 billion, and this year they estimate that they would spend a bit less because of the expectation of lower crude oil prices. The point I want to make here is that while subsidies has been spent on, and it managed to maintain the RON 95 prices at certain prices, which is in this case is 2 ringgit and 5 cents, but the success rate in terms of addressing inflation is very mixed, the way I see it. As I said, if you look at my earlier points just now on CPI for food, you can see it moves along with the international prices. So in that sense, having a few subsidies, it only addresses one particular products. It doesn't address the whole holistic solutions in terms of inflation. The point I want to make is that subsidies has been there for a long time. And based on studies done by MOF, they said that it only benefiting the people more than 50%. And surely this will require, I would say, adjustment or relook of this fuel subsidies policies, because it doesn't result in the desirable outcome. But having said that, this is not something that is easy to be implemented, because whenever you reduce your subsidies for fuel, surely it will affect your inflation. So it's not an easy task for government actually to address the fuel subsidies. But like I said, we need to make sure that whatever we do, it will bear success. But for now, subsidies has not really been a success in terms of addressing inflation in a holistic manner. And also, it kind of an opportunity cost for the country, because the money should actually be spent for capacity building, especially for education, for infrastructure, for healthcare. So because these three critical areas would help to promote productivity of our country. Yeah, I mean, if you spend more on education, I mean, the likely outcome is that you may have a skilled workforce at some point in the future. You spend on healthcare, then you have a better healthcare system for the citizens. If you spend more on infrastructure, it can promote productivity gains, because goods and services can actually travel in a less cost way. In a way like that, that's the whole idea of spending on infrastructure. But then we spend more on subsidies. But the effect, like I said, is still mixed. It hasn't really resulted in a holistic impact in terms of addressing inflation. So these are the policy options, the choices that the government has to make. And if they want to adjust, I think they need to really tell the constituents, the citizen in terms of the intention and the impact it has, while the government is trying to relook back at the fuel subsidies policies. Yeah. And then we look at the extent of wealth inequality. Okay, this is essentially the
Doctor, are you okay?
from the line is now.
Okay.
Okay, sure. Okay, I will proceed. Okay, this slide shows that the extent of wealth inequality in Malaysia, I mean, taken from the investors profile in the Amanah Saham Putra. This is based on the ASB annual report for 2021. So you can see that the unit holder, which represent the investors, the subscription represent the amount of investment in this is the breakdown of the size of investment. So you can see that 5,000 ringgit and below, because the price per unit is 1 ringgit, the total investors within this category, which is 5,000 ringgit and below, is about 7.8 million. Yeah, and this represents about 75% of the total populations who invested in the ASB within the ASB universe. And the amount of subscription, which is the total money invested, is about 4.9 billion ringgit, which represent only 2.69%. But look at those who invested 50,000 ringgit to 500,000, 500,000 and above. The number of unit holder, which essentially the total investors, is actually less than 10%. Look at the total amount invested, which is more than 80% actually the wealth resided within this particular group. So within the ASB universe, you can see that the income wealth inequality is very prevalent. Having 4.8 billion worth of investment, but only 10%, thereabout 10% having an investment totaling about almost 150 billion ringgit in terms of total investment in ASB. So it goes to show that the income inequality is wealth inequality is very wide in Malaysia. So this requires policy intervention definitely, but it's not easy because it will take some time, and typically we would go for education, we go for fair opportunities for all, and this will require time to bear fruit in terms of the impact on the economy. But at the moment, this is the situation in terms of wealth inequality. And then what else? Fiscal deficits in Malaysia has become so structural, and you can see that the government debt in Malaysia currently hovering around 60.4%, which is quite high. And you can see that this is on the right hand side. And whenever there was a shock in the economy, the government debt to GDP tend to go higher. For instance, during the COVID-19, the level of government debt to GDP went up from 52.4% to 63.4% during the COVID-19 era. And if you notice, during the global financial crisis, during that time to go higher, and this seems not sustainable because it requires discipline to address this issue. Otherwise, the government will actually have less ability to stabilize the economy whenever there was economic shocks happening in the future. This is again a message that the government has been saying to the public, that they need to ensure that the deficits level, which is the fiscal balance and percentage of GDP, to become smaller and smaller. And at the moment, based on the medium-term targets, they are looking at 3.4% of deficits by year 2025. Yeah, it means that the government needs to ensure that their revenue and spending will improve, so that the gap in terms of deficits will actually be lowered. So again, this will require adjustment in terms of tax policies, adjustment in terms of spending programs. Again, it will boil down to issues that I've mentioned just now, like subsidies, for instance. Yeah. Okay, this is my last slide. So after having going through all the key points in terms of the sources of volatility and the impact it may have into the economy, then how can we navigate this? But I don't have, to be honest, I don't have the straight answers for that. But I think each and every one of us would have its own role, I would say. For instance, at the individual level, financial literacy is key, lifetime education, and entrepreneurship. These are the, I would say, the key thing that individuals should have in terms of how they should navigate the potential or the challenging environment going forward. In terms of businesses, of course, cost structure matters, because cost structure will actually determine the level of profitability or profit margins. And having digitalization is key, because that will actually improve their productivity and perhaps they're reducing their cost structure. Again, about how they can mitigate, or rather to ensure their profitability or margins will actually be preserved. And looking at the supply chains, and they need to actually relook at the supply chain, especially those who are the export-oriented sectors. Earlier on, I did mention about the trade friction, the trade war between the US and China will likely to continue. And we can see that it has important or significant bearing in terms of supply chains. So the businesses has to look at the supply chains in order to navigate this challenging environment. And lastly, government, obviously, reforms on their fiscal balances and ensuring a good governance is very key. So this, I would say, the key ingredients, how one should actually, address the challenging economic outlook going forward. And I don't think there is quick solutions. It requires time, it requires perseverance, and it may result in some of the unpopular move. So this the key thing that we need to be mindful of, and because we know the going forward, the outlook for economy going forward is not going to be that rosy. So I think we need to take become cognizant about the potential fallout in terms of the volatility in the markets. So I guess that's the key message that I want to share with you. And perhaps I welcome if there is any questions or comments. I will be more than happy to address them or hear them out.
Okay, thank you so much, Doctor, for sharing your knowledge. MashaAllah, it was such an inspirational session, and hopefully the knowledge that we have received can be useful for all of us. Now, we will moving on to the question and answer session. So if anyone has question, you can unmute your microphone or leave the question in the chat box. We also have provided a link for credit health checking and evaluation form in the chat box, so you may also check the link now.
Oh, the slides actually free for all. I think the organizers will share it with you, yeah? Someone actually asking about the slides.
Okay, sure, Doctor. Okay, Doctor. The first question from the participant: what is your opinion when bank raise interest rate and consumers are unable to get loans and even scared to apply for the loans? Is it one of the factors that contribute to economy to decline? Is there any solution to this matter, Doctor?
All right. I think the issue here is why central banks raise their interest rates. Yeah, because it has implications in terms of the affordability for the potential borrowers to get access to financings, right? But before I answer that question, perhaps we need to understand why interest rate was reduced in the first place. So if you recall, I mean, I'm talking strictly for Malaysia, but the same dynamics could also be applied in other jurisdictions. If you notice, in Malaysia, prior to COVID-19, the policy rate, which is the overnight policy rate, stood at about 3%. That was December 2019. When the COVID-19 hit our global economy in the first quarter in 2020, it was deemed as a pandemic on 16 March 2020, if I'm not mistaken. That's the point where the global economy start to crash, start to fall. And then immediately, all central banks across the globe, they prescribe almost similar response, which is to cut their interest rate, to reduce the interest rates. So in Malaysian case, OPR was reduced from 3% to as low as 1.75% by July 2020. And then it stays there. And then it started to go higher last year. Why? Because the economy started to show improvement. In 2020, Malaysian economy was in a recession. The GDP numbers contracted about 5.5%, negative 5.5%. But in 2021, it managed to grow at 3.1%. It's a positive growth. But last year, our economy was growing at a rate of 8.7%. So from minus 5.5, it went to 3.1%, and then it went to 8.7% last year. So it goes to show that the reduction in interest rates as a means to help improve the economy has started to bear fruit. And therefore, there is a justification to unwind those policies, which means to raise the interest rate, going back to its normal level, so to speak, because before it was 3%. Now the interest rate has gone up from 1.75% to 2.75% last year. And then of course people will make noise because people will associate higher OPR with rising cost of living. I think such argument, I think it was misplaced, I would say. That's why I think to answer the question, we need to understand why OPR was was lowered and why it was raised again. Okay, coming back to the question, higher OPR, higher interest rates is affecting borrowers' affordability and whatnot. I think this is a matter of how they manage their own finances. If someone feels that their financial obligations is burdensome, therefore they would need to relook back their liability sides. They have to look whether there is a need to do some refinancing, because when you refinance your existing borrowings or existing obligation, financial obligations, it will stretch your borrowings to a much longer period. That will actually improve your cash flow. Yeah. So this is about financial planning or financial literacy, I would say, because there is a way to address them. But first, you need to identify the sources of the problems. So with that in mind, I think one should, if there is a problem with their finances, especially when they are the existing borrowers for any particular financial institutions, what they should do, two things. One, they can actually go and see the bank itself where they have the financing facility and talk to them and be upfront, be honest with them. And I'm sure bankers are more than willing to help and find ways to work out a win-win solutions. That's one. Second, perhaps going to see the AKPK, which is the Agency Counseling and Pengurusan Credit, which is the credit mediator, which is AKPK essentially is the organization under the Bank Negara. Yeah, AKPK provide free services in terms of financial advice, and also one of the key products that they have is actually, or services is actually DMP, Debt Management Program. Under DMP, Debt Management Program, what happened is that AKPK will become the middleman, the mediator between the borrowers and the financial institutions. So they will come up with a scheme in terms of refinancing or restructuring of their financial obligations so that the borrowers would have a better cash flow. So from my experience, from my observations, a lot of borrowers have actually become successful in terms of addressing their financial calamities whenever they seek advice from AKPK. So these are the key things that one should do. So the point I want to make is that we need to understand why it happens and try to understand what is the real problem that is faced by that particular individual and seek help with the registered authorities. We don't want to fall into a prey to the scammers and whatnot. That will actually make things worse. Yeah.
Thank you, Doctor. The second question from the participant: why BNM did not increase the statutory reserve to curb the excessive money supply in the market?
Okay, statutory reserve requirement, SRR, for information. Yeah, during COVID-19, again, the government has actually reduced the SRR from 4% to 2% at the moment. So far, they haven't touched SRR yet. So that would mean the Central Bank of Malaysia is comfortable with the amount of liquidity being circulated in the system. So they haven't touched the SRR for quite some time at the moment. But I believe they might want to adjust that or revert back to its old level, which is about 4%. But for now, it seems that they are quite comfortable. And usually, SRR is just tools to address liquidity problems. They are not essentially indicates the stand of monetary policy. The one that indicates the stand of monetary policy is OPR. Yeah, OPR. So yeah, my answer to that question, for now, the Bank Negara has maintained the SRR at 2%. They haven't changed it yet. So it means that they still want to allow liquidity or excess liquidity to be circulated in the economy.
Okay, thank you, Doctor. The last question: The last question, will the initiatives to move towards central banks own digital currency, such as CBDC, could improve the state of the economy?
I'm not too, I don't have the answers for that, but I think looking at digital currencies and more recently, people start to talk about de-dollarizations. I think the key theme here is people wanted to revise, or rather to adjust the currency system. So I think that's the message lah. But I don't have the specific answer for that lah. I'm so sorry.
Okay, thank you, Doctor. Is there any other question from the participant here? Okay. Now we have come to the end of the program today. On behalf of our IIUM Academy, I would like to take this opportunity, Doctor, to express our gratitude and appreciation to Dr. Muhammad Afzanizam and all viewers for your commitment and participation. We apologize for any shortcoming in handling this program, and inshallah, we will meet again in the next Baseerah Talk service on 17 May 2023. So you may follow us on our social media sites. We look forward to seeing you again, inshallah. We will now end our session with the recitation of Tasbih Kafarah and Suratul As. Thank you so much. Thank you, Doctor. Wabillahi taufiq wal hidayah.
Thank you, everyone.
Waalaikumsalam warahmatullahi wabarakatuh.
Waalaikumsalam. Thank you, everyone. Bye.
Thank you, Doctor.
Thank you, Doctor.